All right, so today we're going to dive into something pretty interesting in the shipping world.
Okay, sounds good.
It's about Oaktree Capital and their really successful turnaround of this company called Torm AS.
Torm. Uh-huh.
Yeah, they're a Danish company that owns and operates uh, product tankers.
Okay.
You know, the ships that move all those like refined petroleum products.
Right.
So we're basically trying to figure out how private equity can make these big gains in the shipping sector.
Interesting.
We're basing this deep dive on a report called, you ready for this? For podcast, a deeper dive. Oaktree and Torn.
Catchy.
Yeah, well, we'll see how deep we can go.
All right, let's dive in.
So to really understand this whole thing, we got to start with, where Torm was before Oaktree stepped in.
Makes sense.
So they were operating this product tanker sector, right, moving all this refined oil around.
Yeah.
And by like the mid-2010s, they were in some serious financial trouble.
Not good.
Not good at all. The report points to like two main problems they had.
Yeah.
First, those tanker rates, they were super low for a long time.
Uh-huh. Tough market.
Yeah. And second, they had racked up a ton of debt.
Oof, a double whammy.
Yeah, it was not a good situation.
So how did Oaktree come into the picture?
Well, that's where things get interesting. So Oaktree, they're known for investing in these companies that are, struggling.
Right, the distressed asset play.
Exactly. And they saw an opportunity with Torm. So in 2015, they came in and initiated this big restructuring plan.
Okay, what did that involve?
Well, the biggest part was this thing called a debt for equity swap.
Debt for equity.
Yeah, basically, instead of Torm owing all this money, like we're talking $1.4 billion,
Wow.
the lenders, they essentially became owners of the company.
So they traded their debt for ownership.
Right. Which, significantly reduced Torm's financial burden.
Smart move for both sides, I guess.
Yeah, it was. But Oaktree didn't stop there.
So,
They also contributed 25 of their own secondhand tankers.
wow, so they put in actual ships.
Yeah, and they also brought in contracts for 6 brand new ones.
So they were expanding and modernizing the fleet at the same time.
Exactly. It was a pretty big commitment.
And I'm assuming Oaktree got something in return for all this.
You bet they did. In exchange for all that financial maneuvering in those ships, they got a controlling ownership stake in Torm.
How much are we talking?
Initially around 63.5%, according to the report.
So they were calling the shots now.
Pretty much. It's a classic example of this strategy called loan to own.
Loan to own, huh?
Yeah. Convert debt into shares, inject some assets, and boom, you're the majority owner.
Interesting. So they set the stage for a potential recovery.
Exactly. So this all went down in mid-2015 with the initial equity value of Torm estimated at about $876 million.
Okay. And how did things play out after that?
Well, the thing is, the product tanker market stayed pretty weak for a few years after that restructuring.
Also, even with the changes, things weren't looking up right away.
Not really. I mean, Torm even got listed on the NASDAQ in 2018, but their share price was only around $8.
So not a huge return for Oaktree yet.
Nope. By 2019, their stake was worth around $372 million.
Still a lot of money, but not the massive gains they were probably hoping for.
Right. It was kind of a waiting game.
So when did things start to change?
Well, the report points to the period between 2020 and 2022 as this turning point.
Okay, so what happened during that time?
Well, two major things happened. First, you had the whole oil price war in 2020, and then the COVID-19 pandemic hitting.
Right, I remember that.
That created this short-term surge in demand for tankers.
Oh, why is that?
Well, people needed to store all this extra oil because prices were so volatile.
Ah, using tankers like floating storage.
Exactly. But that was kind of a temporary thing.
So what was the second big event?
The Russia-Ukraine war in 2022, that had a way bigger and longer-lasting impact on the market.
I can see how that would disrupt things.
It totally did. You see, Western countries slapped all these sanctions on Russian oil products.
Right.
The European countries, they had to start getting their oil from way farther away, places like the Middle East, Asia, even the U.S.
Wow, that's a huge shift in supply chains.
It was. And on top of that, Russia had to find new markets for its oil exports, which also meant longer distances.
So basically, every barrel of oil had to travel much farther than before.
Exactly. That's what they call increased ton-mile demand.
Ton-mile demand.
Yeah. It basically means the total amount of cargo multiplied by the distance it's transported. So with all these longer journeys, it put a ton of pressure on the availability of product tankers.
Interesting. And Torm, with its improved finances and modernized fleet, was in a good position to capitalize on this.
Right, absolutely. They were ready to handle those longer hauls and meet the increased demand.
So what impact did this have on their business?
Well, their charter rates went through the roof.
Really?
Yeah, they hit their highest levels in years. And that led to record profits for Torm in 2022.
Wow, talk about a turnaround.
It was, by 2023, they were making so much cash that they started giving a lot of it back to shareholders through dividends.
That's always a good sign.
Yeah, investors were happy. And of course, Oaktree was reaping the benefits.
So their investment was finally paying off big time.
Big time. By early 2024, their stake had grown to about 51 million shares.
Yeah.
And get this, the share price had jumped fivefold from that 2019 low.
5 times, wow.
Yeah, their stake went from being worth 372 million to nearly 1.88 billion dollars.
That's an incredible return.
It really shows how a well-timed turnaround can lead to huge gains.
So what were the key factors that made this happen?
Well, the report breaks it down into a few main drivers, and I think they're worth going over.
Yeah, let's hear them.
Okay, first up, you have cycle timing and market recovery.
Yeah.
Oaktree basically bought low when tanker values and rates were in the dumps.
A classic investment strategy.
It is. And then when the market rebounded, especially with that spike in 2022, it created this huge opportunity for growth.
So they were in the right place at the right time.
Exactly. And the report even mentions that daily spot rates for tankers more than doubled, going from like $15,000 to $20,000 a day to over $40,000.
Wow, that's a significant jump.
Yeah, it made a huge difference. But timing wasn't the only factor.
What else played a role?
We'll remember that massive debt Torm had?
Uh-huh.
Well, getting rid of that through the restructuring was crucial.
Right, it gave them a clean slate.
Exactly. With that debt gone, all those extra profits went straight to the owners instead of being eaten up by interest payments.
So it amplified their returns.
Precisely. It also improved their financial flexibility so they could make strategic moves when needed.
Makes sense. So what about the ships themselves?
Yeah, that's another big one. The modernization and expansion of the fleet was super important.
Right, Oaktree brought in all those newer vessels.
They did. And they also helped Torm sell off some of their older, less efficient ships.
So they streamlined the operation.
Yeah, and they focused on having more modern ships, including ones with these things called scrubbers.
Scrubbers.
Yeah, they're these systems that clean the exhaust gases from the ships.
Oh, interesting. I've heard of those.
They can actually give you a competitive advantage because they meet stricter environmental regulations.
Oh, so they can charge higher rates?
Exactly.
Yeah.
So all of that together, the new ships, the scrubbers, it all helped Torm reduce costs and operate more efficiently.
So they could really take advantage of those high charter rates.
Exactly. The report says their fleet grew by about 15% after the restructuring.
Impressive. So they were bigger and more efficient.
And then you can't forget about those geopolitical events we talked about.
Right, the pandemic and the war in Ukraine.
Those created this perfect storm for the product tanker market.
Yeah, the whole reshuffling of global oil supplies.
It all played into Torm's hands. They had the right ships at the right time to meet that surge in demand.
It's like all the pieces fell into place.
It really did. So by mid-2024, Torm's share price was at an all-time high, and Oaktree decided it was time to cash in.
Smart move.
Yeah, they started selling off parts of their stake, first in late 2023 and then again in May 2024.
At those high prices, they must have made a killing.
They did. They were selling shares for between $30 and $37 each.
Yeah.
And even after those sales, they still own just under 50% of Torm.
So they're still heavily invested.
Yeah, and that remaining stake is estimated to be worth somewhere between $1.7 and $1.8 billion.
Incredible.
The report calculates that their overall return on investment is 5 times what they initially put in.
5 times their money.
And they're looking at an internal rate of return of about 38%.
That's a phenomenal success story.
It really is. So what can investors learn from all of this?
Well, the Torm case really highlights some key principles.
Like what?
Well, first, it shows the power of counter-cyclical investing.
Buying when everyone else is selling.
Exactly. You got to have the guts to go against the crowd and snag those undervalued assets when the market's down.
And it helps to have expertise in restructuring too, right?
Oh, absolutely. You got to know how to navigate those complex financial situations.
And then there's the importance of active ownership.
Right. Don't just be a passive investor. Get involved in shaping the company's strategy.
Like Oaktree did with Torm's fleet.
Exactly. They made sure the company was positioned for success.
And they timed their exit perfectly too.
Yeah, knowing when to sell is just as crucial as knowing when to buy.
They sold into strength and locked in those massive profits.
It's a valuable lesson for any investor.
It is. And I think the final takeaway here is the importance of having a long-term perspective.
Right. Don't get spooked by short-term fluctuations in the market.
Especially in a cyclical industry like shipping.
You got to be willing to ride out those ups and downs.
And have faith in your investment thesis.
Exactly. Sometimes the biggest rewards come to those who are patient.
So to sum it all up, Oaktree's investment in Torm is a perfect example of how a distressed turnaround strategy can really pay off in the shipping
It
industry.
was a combination of strategic brilliance, market timing, and a bit of luck with those global events.
And it shows that private equity can find opportunities even in struggling sectors.
Absolutely.
Now, this was just the first of 4 reports we're going to be looking at that examine these successful private equity plays in the shipping world.
Right, we've got more deep dives to come.
Our next one will be focusing on John Frederickson's stake in Frontline.
Another fascinating story.
Definitely. So make sure you tune in for that one. We'll delve into how Frederickson became one of the most influential figures in the tanker market.
It's a wild ride.
It is. And for all you listeners out there, I want to leave you with something to think about.
Okay, hit us with it.
As you follow different industries and companies, keep an eye out for those who are struggling but might have the potential for a turnaround.
Right, look for those hidden gems.
Exactly. Think about how the principles we've discussed today, the importance of cycle timing, active ownership, and a long-term perspective could apply in other sectors.
Because those principles are universal.
They are. The same strategies that worked for Oaktree in shipping could work for you in other areas.
So keep your eyes peeled and your minds open.
And who knows, maybe you'll find your own Torm out there.
All right, on that note, I think we've reached the end of our deep dive for today.
Thanks for joining us.
Until next time.
See ya. Bye.